Welcome back. Prime Minister Modi is in the United States, and when he meets President Trump at the White House later tonight, the two leaders are likely to discuss energy security and India's relationships with Russia with respect to crude oil imports. Now, CNBC-TV18's Manisha Gupta caught up with the co-president of S&P Global Commodity Insights from the sidelines of the India Energy Week, and she began her conversation by asking him his expectations from the Modi-Trump meet.
The conversations we're having here at India Energy Week are focused on how India is very keen on bringing gas into the energy mix more and more. And that creates a common cause with the U.S., which is very keen to export as much gas as possible. So it seems very likely that there's a natural ground that's been set for some sort of government-to-government agreement, in principle at least, around LNG exports to India. And that would be actually a good deal for both countries. How that then gets put into practice by the companies themselves, well, that will all follow on afterwards. But I'd expect to hear a lot of positive developments around the gas market for sure.
There's also a lot of conversation on what the next 4 years could look like with Donald Trump as the U.S. president. A lot of changes perhaps in policies and the way the world functions. Tariff is something that we already have started to react to.
Yes, it's interesting to think about what will happen after the round of tariff conversations, which could stretch on for months, really. But what follows on after that, after this administration has marked out its space theoretically and economically around global international trade? Looking beyond tariffs, it seems very likely that the U.S. wants to be at the center of a very transactional, trade-oriented flow environment in the global marketplace. So it'll be interesting to see how commodity flows change, how energy flows change once this tariff situation settles down. There will be big changes there, and likely the U.S. will be importing less of certain markets and exporting more. And then how that settles up the rest of the world is the question we all want to see answered, really.
You know, Dave, years ago, and this was a saying really, that every 20 years the world changes, and then it got cut down to 10. Would you say it's come to 5 now?
Probably come down to every 4 years at this point, I would say, right? So, and we can expect to see a lot more policy change coming beyond that. Really, the question on people's minds, though, not just here in Delhi this week, but everywhere else in the world I've been lately, is how does the rest of the world reposition itself following on from these positions that are being taken by the administration? And that's actually where the conversation has already begun to evolve to, is what will India do? Also, what will Canada and Mexico do? Right. What will China, what will Russia do? So there's a lot of dominoes to fall after this next couple of weeks and months, which is where that every 4 year cycle begins to come from.
So would you say that it's going to be very, very difficult to predict crude oil prices for this year now? Because most of the people that I have spoken to in India Energy Week over the last 2 or 3 days do say the same thing.
Well, actually, oil prices, ironically and a bit unusually, are one of the relatively knowable constants in the world today. I mean, I don't know about you, but I'm more used to a world where oil prices are like the wild card, right? But actually, we expect oil to be averaging around $70 to $75 a barrel this year and next year, with a downside risk there. I mean, it could be closer to $70 a barrel next year, closer to $75 a barrel this year. The risk is to the downside, though, because when you look at the tariff situation, the slowing of international trade, and perhaps slowing GDP, we're already in a fairly lukewarm environment for growth in oil demand. That could begin to fall a little bit. So, but even there, we don't see necessarily a collapse in prices, because structurally speaking, these kinds of prices are sort of built into the cost as well.
Okay, by the way, here is